welcome. There's something about real estate podcasts. We are TSARE. Jonnita Stanton.
Wait, you gotta tell them what TSARE stands for.
No, I did. There's something about real estate.
I thought you were
Acronym.
saying TSARE.
Huh?
Thought you saying somebody was sorry.
Right. No, TSARE. Or we could go with TSARE, but TSARE, it's a good ring. Mm-hmm. My business partner over here, he's got Masari, so it's a good match. Masari, TSARE, big all money,
right. All right. Yeah, make it all rhyme.
There it is.
All right. I'm Reginald Perryman. Reggie is real estate.
Shaka Sales, Masari Building and Renovations. And today we have a very special guest.
Very special.
I call him Kellz, but not to be mistaken with our Kelly.
Exactly. Kelly.
Right. Kelly, Kellz.
No,
don't call me bad names. Kelly Shamoon.
There it is.
I'm with Premium Homes Realty.
Okay. Great.
Good to be here. Thank you for inviting me, guys.
Appreciate you coming, man. We didn't think we was going to be able to get you out here, Kellz.
Yeah.
Especially this late. Kellz don't even hang out down here past 5.
No, I don't.
Wow.
He just wanted to hang out with his friends.
Yes, I did. That's right.
For sure. Go ahead, Johnny. You can
and
start.
I know you're getting ready to leave.
Yes.
So,
tomorrow.
really appreciate you coming. You're getting ready to have a long road trip ahead of you.
Yes.
But you are one of my favorite people. I know sometimes Kelly get me on the phone and I be just waking up or having a bad day. But I love Kelly. I tell you, he makes it all happen, honestly. He is what you call the money guy.
Uh-oh.
I hope that's not all I am.
Where's the money?
Right.
Nah, he's my man. That's my man. Private financier, right? Yes. So let's start off talking a little bit about what private financing is.
All right. So, So pretty much private financing is you find someone that you know. It could be, company. It can even be your, relative, uncle, aunt, whoever it is. But most of the time, it's just company that lends money to individuals, companies. We normally just do companies that we lend money to. So private money is coming not from the bank, but it's coming from normally it's either the person you're dealing with. So my situation is me. Sometimes, some companies put all their funds together, and we can talk about that later. But that's what it is, just their own private money, using it to finance or help an individual that needs to buy property, commercial or residential.
So I'm sorry. So, yes. Kelly, can you give us a little bit of background on, who you are and how you got started?
Sure.
That's a lot.
Well, so I'm originally from the Middle East, so that doesn't really matter. But my parents were immigrants. We immigrated here, went to Detroit public schools.
Yes.
And then I didn't graduate though. But anyways,
you still went.
I still went.
One time.
Yes, and so pretty much I went into business for myself. I was kind of in. I don't know if you guys remember cell phones or beepers. We started out with beepers and then cell phones. So I entered the cell phone industry, and the good man upstairs blessed me and took care of me, and we were able to go inside all the malls. I don't know if you guys remember there used to be a lot of kiosks inside the malls that sold cell phones.
Yes.
Right.
And so we were one of them, and so we did that. We multiplied that, and then we started doing the storefronts, and then I sold out, and that was good, and that kind of helped me to kind of get started on my financial, journey. And then I moved out of state because I had a non-compete here. I moved out of state, and I did the same thing in a different state, and then over there I sold out. It was a smaller company, and then came back, and then I did an exclusive with T-Mobile, and I sold that, and then just kind of sold a couple more companies, and then I said, I'm done retail. So my background was really retail, and then now I started I started kind of like flipping a little bit, just buying, renting, and flipping. I'm like, I don't know what the heck I'm doing, I said, let me just mess around with that, and then I said, forget it. I don't flip. I hate it. And we could, it's another
message.
Story. Yes.
Right.
Yes.
Even the people with the money don't want to do the flip.
Yeah.
Right.
So here I am.
for sure.
All right. So I always tell my agents this. I tell newbie investors this, especially if they're looking for money. People want to make money in real estate, but they don't always want to flip, right? They don't want to find a property. They don't want to go through the rehab. So what I'm hearing from you is you still want to make money in real estate. You just don't want to be the guy that's going out finding the contractors and all that stuff.
Yeah,
All right.
the whole
Yeah.
process.
So what is the difference between hard money and private funding?
So
Is there a
honestly,
difference?
Honestly, there isn't much of a difference. I mean, when I think of private financing, I think of, your uncle, your cousin, your friend, whatever. Hard money lenders are more of a company that loans. So, that's how I look at it. But I think they're
Right.
both the same thing. You're borrowing money from someone, whether it's a family or third party or someone like me,
Right.
and they're financing you versus the bank.
Okay.
Okay.
Yeah.
Do you think that the hard money would have like a negative connotation, to, like, very comparison to like a loan shark or something like that?
Yes. And I always
Okay.
tell people, don't call me a loan shark, I help people out. And I
Right.
really do. And to me it's to me I see it that way,
Right.
but it does have a little bit of a loan shark, he's a loan shark, whatever.
Mhm.
But really to me it's all about helping. It's all about,
Right.
giving back. If I can't help you, I don't want to do the deal. If I can give you my money and you can use it and make something out of it, then hey man, I'm happy. If not, I don't want to do it.
Right.
So you're not putting a gun up to nobody's head.
No.
So you tell them the terms, and if they agree to the terms, then let's do it. If
Yes,
you don't
let's do
agree
it.
to the terms,
That's
move
right.
on.
Right.
And and when we talk about terms, and we probably cover that, when I go see a deal and I see it and I see the numbers, I can tell that hey, this is going to be good for you, and it's you can do it with us now, But if I see it and there's not enough meat on the bones, whatever you want
Right.
to call it, then I don't want to do that deal. And I always try to encourage people to look at it that way, but Jonnita and I have had that thought. We've had that, and but sometimes I'm wrong. So
Right.
Yeah, because you have to have like a level of trust with your investors.
yes,
Now, maybe not with a novice, but with
That's
your
right.
experienced investors, people who have been around the block a few times, you might trust them a little bit more. Like you build a level of trust with your people.
yes, I do. Yep.
He
Yeah.
is there with us right now, right?
That's
you
right.
Trust
Yep.
us, right?
I do,
No,
and-
seriously, he does. We didn't have some deals with Kellz. Like he looked. Jonnita is more aggressive, right?
Yes, she is.
So then Kellz look at me and like, man, because I'm not as aggressive as
Yes.
she is, and he'll look at me like, are you sure? You know what I mean? But that's all he need though. Like for real, if I say Kellz, we good, then it's a done
good.
deal.
It's done. Yeah.
So let me ask you this. So let's say a new investor come to you. You don't know this person. What are you primarily looking for? Are you weighing it more on the actual numbers of the deal, or the investors, like their credit and how much money they have? What are you? What's your deciding factor
Yeah.
on that?
Good question. Thank you, Reggie. So really, I look at a few things. One is, so if it's a newbie, a new guy, it's all right. I'll work with them
Okay.
as long as their numbers are right. So what I look at is if the deal is good, he's a new guy, we have resources that we can help him with
Right.
to get to a point where he can succeed. That's great. But preferably we like the experienced guys. We want the guys that have done a couple flips behind them, and they understand.
Right,
it ain't that
right.
easy.
Right.
And so, but most of the time we look at the asset. There's no credit checks. There's no, any of that. We're asset-based lenders is what they call us.
Okay.
So we look at the property and we say, okay, it's worth $100,000. Okay, great. It is worth that much. If God forbids, we have to foreclose. At least we can, sell that property right away and get our money back. So mostly it's the asset and the guy that's borrowing it, his experience a little. But if we can tell, he's kind of okay and he has common sense,
Right.
yeah, we'll take him on.
But there is a ability to pay associated with what you do. And so if you don't ask someone to show you their ability to repay monthly?
No, I do not. Maybe I should.
No, you shouldn't. No, that's a joke.
So,
No.
because what I always tell new investors, they're always like, I'm trying to get pre-approved or this, and that. And I say, find the deal and the money will find you.
100%.
Absolutely.
So is that right?
That is right.
Okay.
Yep. If the deal is good, people will help you.
Right.
You know, if it's a good deal. And you know, like last week, you know, just I funded 100% on a deal that was great. We had to close right away, and it was a lot of meat on there.
Right.
We gave him 100% of the money.
Mm-hmm.
You know, and you didn't put nothing down, nothing. It was
I'm
a good
upset
deal.
about that.
Yeah, I'm
Yeah.
a little. I'm like, I gotta
We haven't got
15%.
100% of our deal
Yeah,
finance
but
yet.
you know,
Yeah.
but
I'm sitting here rolling my eyes.
it was one of those deals. You know,
Right.
it doesn't happen that often, but it was a good deal that he knew he had to close on,
Right.
and you know he needed the money. I was like, wow, this is good. You know, and you know, so and that happens once in a while with the industry, right?
Right.
It's not that often.
Are
For
you
sure.
ever looking at it like, I really don't care if you finish it or not?
Yeah.
On that deal right there,
I'm like,
right?
we can just sell it right away. He could have. I think he's just gonna put it back on the market.
Okay.
He didn't even buy it on the market. So
Right.
So my question is, we're talking about meat on the bones and what a good deal is.
Yes.
It's got to be some type of numbers that you put towards that, percentages.
Yes.
So is there a percentage? What is your method?
So every transaction is unique. So some people loan on loan to value. We do loan on purchase. So if the purchase price is, let's just use a number. Let's assume they're buying it for $100,000, and the ARV after repair is $200,000. It's just kind of for math's sake, we'll use that. So 100,000, 200. If the repairs are, $40,000, $50,000. And then, you sell it, and then you have closing costs, whatever. So we look at it and we say, okay, we'll do the repairs 100%. It's a 50% purchase price, needs 50,000 to get it to the 200. But if God forbids, he dies,
Right.
what can we sell it for so we can liquidate it? And if it is 100,000, then we might do 90, 80% plus 100% of the rehab.
Right.
So, but if it's a $200,000 house and they're buying it for 70,000 and it just needs 50, most of the time, hey man, just put in 10,000, we'll pay for everything.
Right.
And if you don't have it, if we look at it and we say this is a good deal, the neighborhood's nice, we'll fund 100% of it.
Right.
Depends on the person too, his experience, who it is. If it's Jonnita, 100%. If it's Shaka, but if it's someone that's new and so it just depends on the scenario. But typically, I would say 30% is what we ask for down on the deal, and then we finance the rehab 100%.
So you're saying 70% of the ARV after. So Reggie gonna talk about a little bit of what ARV means.
So ARV is after repaired value. So this is what the home would sell for fixed up and repaired on a retail market to maybe like a homeowner, right? So, but what I'm hearing you say is you're loaning the money to acquire the property and make the repairs.
Yes.
So for all you investors out there that want to know how to buy properties that are distressed, they can come to you and borrow the money to acquire the property and make the repairs.
That's right.
Right.
Yep.
But you're also so the reason you do a percentage of that is because you have to minimize your risk as the lender. Okay.
Yes.
That makes
So,
sense.
So we talked about, lending on ARV.
Right.
We don't lend on ARV. We lend on purchase price.
Okay.
So because ARV is 200,000, right?
Right.
So we're not gonna give you 70% of 200 if you're buying the property at 100,000. We're gonna give you 70% of that $100,000 that
Correct.
you're buying it for. So just to make that clear, some people, think they're gonna get that and more.
And
Right.
walk away.
Right.
Walk away.
Yeah.
And see you later.
Right.
Yeah, so,
See you later.
Okay.
so what you're saying is if you have the property has an ARV of 200,000,
Yes.
you purchase price is 100,000.
Yeah.
You're gonna lend 70 of that 100, right? For
Yes.
the purchase.
Yes.
And then the repairs are $40,000 or $50,000.
Yeah. Use 50.
Right.
Yep.
Use 50. So then you're gonna lend what percentage of that?
100%.
100% of the purchase. So you're gonna
Yes.
lend
No.
70. What he said?
It's not gonna be 100% of the purchase. It'll be 100% of the rehab.
100% of the rehab.
70% of the
Yeah.
purchase. So they buying it at 100,000. He gonna lend 70,
Mm-hmm.
Yeah.
and then 100% of the 50,000 that's gonna take the rehab in draws.
Yes.
So they're doing the 70. So in this case, 70,000 plus rehab is your loan amount.
Yes.
And they got to pay the difference. So for a new investor, if you're buying from a realtor or a wholesaler, the first thing you need to do is calculate your purchase price, come to a decent contractor and maybe get 2 or 3 bids to determine your rehab costs, and then maybe have a realtor or someone do some comps for you to determine the ARV, because all 3 of those is going to matter.
Mm-hmm.
That is right. Yeah.
Okay.
All those 3.
All right. Plus what you have in the bank,
Yep.
because you got to put some skin in the game.
And
In
you-
most
Right.
cases.
You have to be careful, when you're acquiring the property, because Kelly's money not cheap.
Right.
Not cheap,
right.
And
It's not cheap,
I mean,
but it's
literally,
blessed.
right. But we just, so right now we're in the process of looking for more, acquiring more homes, and I saw a deal that I absolutely love, but Shaka and Reggie.
Yeah.
Reggie's like the the conscience in the ear.
I'm very
But
conservative with my
He's
numbers.
very conservative. He's very conservative. I'm conservative in how I run my numbers,
Yes.
but I'm not necessarily conservative in, like I'm going to make the purchase if I can see there's meat on the bone.
Yes.
But we literally just had to walk away from it because, it's like, although it's a good deal, although it's in a prime area, although like all these things, we still have to take into consideration if we're not going to like use our own money to pay for the acquisition and the rehab, and we're going to, bring someone else into the deal like you,
Mhm.
then, is there actual money to be made?
That's right.
Because there is a lot, it's like, don't make the mistake of thinking that, this money is very inexpensive money,
Yeah.
because you have to pay for the money.
That's right.
You have to. If
Yes.
you're gonna have somebody lend you money without checking your credit. They don't care if you got bad credit,
Yep.
right?
don't care.
Because so you have to secure yourself some way.
Yes.
You know what I mean? And that's by making sure that they're not too much into the property, so that if you do have to take over the property, you can make your
Liquid.
return
Yes.
on the money that you invested is
That's
whatever
right.
whatever you're expecting.
Yes. So
Yes.
banks look at credit and
Right.
how your income is. We look at the asset. How's that asset? Is it good? Okay, great. If we were to take it over, can we liquidate and sell right away, get our money? Yes. All right. Then we have a deal.
Right.
If but obviously we talk things through with the borrower, make sure he understands. Is he able to make his payments?
Right.
Can he do that? And sometimes we're small enough to where we could customize
Yep.
the loans
Right.
to where he might say I cannot make $1,000 a month payment, but I can make 500. No
Right.
problem. All right, we'll add that in the back end, the difference, and we'll customize it to your need. And we do that with our regular people who we trust and we have a relationship with.
Right.
So
So
good
that's
question.
that's a tip or message right there.
Yeah.
You are not putting, because I'll tell you something. When I first started, investing, I funded my own deals. Then a hard money lender, private money lender, found me.
Oh,
Right?
yes.
No, he was different.
Uh-huh.
He used to fund 100% of the purchase and 100% of the rehab. It got to the point because he didn't want to deal. He was finding the deals and getting the houses cheaper than I could get them. So he was coming and bringing me the deal.
Wow.
You know what I mean? Like he was like, hey, you just handle that. He didn't even, he just wanted to get his money off of the sale. So off of the lending.
Yeah.
Off of the lending.
Okay.
Which was why when Jonnita, I actually quit flipping
Right.
because I could not find what I consider real hard money lenders. You know what I mean?
Right.
People that was really lending to because it's really a partnership, right?
It really
you
is.
need them to make money
Yeah.
so that you can make money, right?
That's right.
And the more deals they do, the more money you make.
Yes.
Right?
Yep.
Successful
So-
deals.
Yeah.
Yes.
Um, so a couple things we want investors to factor in, and you mentioned this too. They have to be able to cover their carrying costs, their holding costs. So
Yeah.
a rehab may take 3 or 4 months, so you have to be able to manage your utilities and your payment. So you're looking at that up front. You want them to have some cash reserves.
Absolutely.
Because when you say finance 100%, you're talking about acquisition and rehab, but not the carrying costs in most cases.
Yes, that's
Okay.
right. Yep.
All right.
Yeah, always. Yeah, they pay their own utilities, and there's a monthly payment every month that they have to be able to meet.
Right.
We work with them if sometimes things happen here and there. We work it out.
Right.
But end of the day, they should be able, and we make sure you're able to do that. This is a good deal. We like it. Like Jonnita was saying, she brought you and both of you guys to look at the deal to kind of justify if she should buy it or not.
Right.
And what a good blessing to have two individuals or experience who can come in and help you with that process. A lot of people don't have that.
Right.
So I'm able to help them with that, and appraisal is just someone's opinion, right? So
Right.
But I look at it and I say, listen, man, I'm going to help you with this. I'm going to put my money on it.
Right.
So I feel good about it, So that's a good confidence builder for the buyer.
Right.
Because sometimes, they bring a deal and you're like, this is not a good one, I'm telling you that right now. But if you really want it, I'm telling you ain't gonna make no money. And sometimes I've been wrong, because the market goes up, it's been going up, right?
Right.
So I'm like, if you're gonna sell it here, you ain't gonna make money. And some guys, some areas went up so high that they were able to make it off of that.
Right.
And I'm like,
That just
I guess-
happened.
It happened.
That just happened.
Yeah.
So we had this property that we purchased, and Kellz is always the first person that I go to see if he wants to do the deal.
Yeah.
So he walks away from me. He says, "Nope, don't like it, don't want to do it." Mm-mm.
Yeah.
Yeah.
We made probably about 15-20% more
Than what we expected.
than what we
100%.
expected.
We had a good deal, Kel. You missed that one.
Don't tell me it was that rundown house that I said, oh,
No,
man. Oh,
you were
okay.
gonna finance that one.
I was,
and we
yeah.
still. What I'm doing.
Oh, we still doing that?
Yeah, we're still
What
doing
you
it.
mean? Don't tell you that one.
Yeah. No,
I
it
think
was.
that one is on the up, actually. So you're
Right.
going to make it on the up. I don't know about now.
No, it was the little bungalow, the 3-bedroom bungalow on the west side.
Oh.
Ardmore. It was
Oh, James
scary.
Cousin.
I'm not
It was
gonna lie,
scary,
but
okay.
that's when you gotta like. I trust her.
Yeah.
Especially in the city of Detroit, because
Yes.
she has she understands the city.
Sure.
She really understands the city.
Yes.
So.
Right.
That's
Yeah.
awesome.
But yeah, we did good on that one, Kel.
Did you really? Oh, shit.
Better than I expected.
You know what? I'm
So,
so happy, man. That's great, man.
so what I'm hearing also is that dealing with like a private lender, since you guys are basing everything on risk, that can also be somewhat protection for a new investor, because you're saying these numbers may not work in this
Yes.
market, right? So a new
Yeah.
investor might want to take a chance because they're speculating a little bit more. But with you involved, you'll say, hey, these numbers don't make sense.
Yes.
Okay.
He's just as he's me and you.
Okay.
Mhm.
You know, like,
Right.
he's real close. So that's why,
Yeah.
like, actually in the whole thing, Jonnita is the wild card. It actually works out, right?
Yeah.
She
It does.
just brings
Yeah.
everybody out of the shell. We all like,
She makes us
nah.
stretch.
Yeah.
Right, right.
I don't want to stretch.
So
Get
what,
you in.
what Shaka is saying is me and Shaka is because I look at the market, I know it can go up in a projection, but I'm also factoring in that, hey, this project is going to be 3 to 4 months. I have to consider the market going soft within that 3 to 4 months. So maybe the comps are saying 200 or 205, but I may have to sell this for 190. What then? Right. And I don't want Kellz coming after me, right?
sure.
Absolutely.
So
yeah.
so for us as investors, believe it or not, our goal, I don't ever want my lender to lose money.
Absolutely.
So our immediate goal is not even the profit. Right?
Mhm.
Our
Right.
It's for it
immediate
to be
goal is
successful.
making sure that he gets his money back
Mhm.
so that we can eventually borrow again. You know what I mean?
Yeah.
So,
Or go ahead.
And yeah, and thank you for that, Shaka. And one day,
Right.
one day there'll be a time where, and I don't know when, and we can all speculate.
Right.
We're gonna have another downturn a little bit. It's not gonna be as bad as 2008.
Right.
And I'm gonna be in a position where I'm like, dang,
Yeah.
you know, some people are gonna walk away from some of the deals or whatever because we're just asset-based lenders.
Right.
So yeah, so we're taking a risk too because you know some guys will just walk away. They can't sell the property. I don't blame them. You know, end of the day, you know that's gonna happen. So we're in it for the ride with everybody. You know, and but you know so far we've been good. You know,
Right.
but there is gonna come a time where that's gonna happen.
But I want to talk a little bit about that
Yeah.
because the time that we all probably anticipated that it was going to happen was around March of 2020. And I remember you put me on hold for several
Yeah,
months.
I did.
You know, and you
I
know,
shut everything
yeah,
down.
it shut everything down. And I probably came back to you around June or July-ish or something
Yeah.
like that of 2020. You know,
Right.
hey, Kelly, how's everything going? What are you doing now?
Yes.
But what did you do, you know, during the pandemic when it first...
When it
Because
happened.
you talked more about stock at that
Yes.
point,
Yes.
more
Yeah.
than even the real estate.
Yes. Yep. So I was looking at stocks. I'm like, oh man, you know, stocks were good, but you know, we you know, so everybody during, I think, I don't know, whoever said they weren't, I think they're lying, but everybody was like, something's gonna happen with the real estate. You know, something, you know, the world stopped,
Right.
and you're like, what the heck? I mean, this is really happening. And so we're like we're funding, everything was going great, you know, we're having a great year, and then we stopped, and I was like, okay, maybe this is it, you know, and we prepared, you know, I've been preparing for that, you know, it's gonna come down, you know, so as long as you're prepared, you're okay. And so I stopped and I said, you know, okay, let's look at the loans, let's look at the deals, and let's see
Right.
who's gonna walk away. So we're
Right.
kind of analyzing all the numbers, but it turned out to be one of my best years. You know,
Absolutely.
2 months later, we started again, and we're like, you know, we're
Mhm.
going at it, you know.
Now, when
and-
you say look at the loans, look at the deals, that means like your inventory. So what you had lent
Yes,
out.
yes.
Okay.
So what all the real estate that we've lent out, you know, what is it worth? I was thinking, okay, this is gonna go down because you know we do aggressive lending, and some
Mhm.
are conservative, but we do go aggressively, you know, and so you know I'm like, okay, you know, this looks like we're gonna probably lose, you know, 1.5 to $1 million on, you know, because I was anticipating it's gonna go down the real estate. I don't know if you guys were, but I was.
Right.
And then I said, okay, so this is what's gonna happen. And you know, I was thinking of like, okay, how we're gonna deal with everybody. And I said, you know, we'll just work it all out.
Right.
You know, if we need to lower our return, or we have to do it, we just make it work.
Right.
Mhm.
But 2-3 months later, we're
Yeah,
at-
because I know I called
but
you.
that was going through my
Mhm.
mind. You're right.
So we were finishing a project.
yeah.
And we just
And-
started a new one though. That Kel passed on too. He passed on another one.
Okay.
Yeah.
I did.
He passed on another. He's been stopped passing
Right.
on another.
Yes.
Like, yeah, he
But
passed
but
on.
we had just finished one, and what happened was before the governor called a shutdown, we listed it I think 48 hours or so before that happened. And I know we were kind of like, oh my God, we just listed this property that we just completed.
Yeah.
You know, it's not going to do anything. We
Right.
probably received an offer within 7 days, sight unseen.
Silence.
Sight
Yeah.
unseen.
So
During the
Never saw the
during
During the
March, April.
Yes.
Never saw the house.
so this
Never
is,
saw the house.
You
So
sold
this
it at that
so
time.
this
Wow.
was in March when we went pending.
That's
Yes.
the one I'm talking about though. That's Kel was supposed to land on that. That was after.
Yes.
He passed on that one.
but see,
Really? That's cool.
this is where I tell people you need a team of professionals because as a realtor, we were looking at our showing time requests.
Mhm.
So when we were locked down, they said you could still do virtual showings.
Yeah.
So we were having sellers videotape their home, upload it, and people were making offers sight unseen. As a lender, you probably wouldn't know that. As the
No.
general public, you wouldn't know that.
Mhm.
But this is information. If we share it out in the open, people would have known that, hey, this is not bad because we're still getting 11 offers on this property
Mhm.
sight unseen. And then they loosened it up probably about 30 days later. They said inspectors can still go
Yes.
out. We couldn't go out. So people were making offers subject to inspection because that's all you really want was the inspection, really.
Yeah.
So there were a lot of loopholes in there and little ways you could tell that the market wasn't about to
And if you were
crash.
still answering your phone and being present and, you know, being productive, you were still, I mean, I was quite shocked myself, you know, as to how things played out during that time between
Yeah.
like March and probably September during 2020.
Yeah.
But it just was funny to me, what you actually did, because I was just getting to know you, and I didn't know that you are who you are.
Mhm.
And I had to literally do my due diligence and follow up with you to say, hey, look, we still want to work. What are you
Sure.
doing?
Yes.
You know what I mean?
Yeah.
So, thankfully it all worked out.
Yes, it did.
He got
Now,
a hint though too, though, right?
but not at that point.
None.
None.
Oh.
So
You didn't do anything that.
I thought we
Mm-mm.
did.
we did after, I don't know what art no what
Piedmont?
Piedmont and Penrod came right after Memorial.
Oh, was it?
Yeah.
Okay.
So but what do we think contributed to that? The low interest rates?
I think it was the interest rate and the pent up demand was already there.
Mhm.
Yeah.
And then in addition to that, because people wanted to be away from crowds, I personally think people wanted to get out of apartments and they still
Mhm.
needed these homes. Plus, you include homeschooling.
Right.
So, like, people were working from home, people were homeschooling, and they're like, I'm in this 600, 800 square foot apartment. This is not going to work. I still need to continue house hunting.
Or military duty with needing a place to go back to.
When they got home.
Exactly.
Yeah.
That's what happened to us.
Yeah.
Mhm.
So it was a lot of that going on. Let me ask you this too. So we talked about private money lending.
Mhm.
How does someone is sitting there, they want to invest in real estate, and maybe they have a uncle or someone that has 200,000,
Yeah.
and how does that uncle protect themselves if they want to do a personal loan or private lending loan?
Good question. So, so if I'm a beginner, and use your resources, right? Your uncle, your aunt, whoever has money, they're
Right.
sitting around. They probably has it in a bank, collecting 1% or whatever it is, or
Not even.
not even that, or whatever they're doing with it. If they know that this person has money, I would approach them and I would say, hey, listen, uncle, I have this deal. Here it is, and show them the numbers. I want to buy it, and
Right.
I want to borrow the money from you, but guess what, uncle? You're gonna be the owner of that house.
Okay.
Okay, so let him buy it, then he land contract it to you, or he can put a mortgage on there, a lien on the property with a promissory note,
Right.
and
Or mortgage. No.
or a mortgage
Yeah.
note with a promissory note, and so now he's secure. He knows his money is in the house, and then make it something that your uncle could feel justified that he gave you that money, whether it's whatever percentage you want to give him,
Right.
but make it fair so you guys both can win.
Right.
But make him feel confidence, because people rely on your confidence. If you're confident and he sees a good plan and he sees that, okay, you've thought it out and you got a plan and you know how to execute it,
Right.
and also the relationship really helps, because that takes away from the trust factor, right?
Right.
So that's great. So I would approach him that way and say, here's how I'm going to secure your money, so you never have to worry about that.
Right.
And I'm pretty sure the uncle, if he knows you well enough, he knows you're responsible, he's going to help you. Ideally, I should be the last person that you should come to. I'm the last person. If you can get the money from your, if you can get it from the bank, get it from your
Right.
uncle, they're going to be a little bit cheaper than me, a little
Right.
bit. So other than that, I'm the last option, and so that's how I would approach him, or a friend, someone that you have a good relationship with,
Or creating a group, and
Yeah.
Right.
or bringing a bunch of investors. Yeah, that
Yeah.
becomes a
Right.
headache, but sometimes it's okay to start that way.
Mhm.
So the borrower still needs to have a plan, just like a business plan. They need to be able to show the numbers.
Absolutely, yes.
Would you recommend a person loaning the money have an attorney prepare like a mortgage document or the land contract and things of that nature?
If I was the uncle, I want that.
Okay.
Yeah, hey, let's get the attorney to do the docs right, and title company as well, and
Right.
here you go.
I have
So-
a personal question. I'm sorry.
Yeah.
I was going to say this is another message. Uncles, grandmas, grandfathers, you can make money in real estate
Absolutely.
Yes.
without being in real estate. Just loan it to somebody in your family that knows how to fix and flip houses and get a return on your
Mhm.
investment. So I heard you mentioned that you were looking at stocks when you thought things were going to go bad here.
Yeah.
So you're just looking for opportunities where you can put your money and get the best return.
Yes.
And real estate is being consistent for you.
Yes. Real
Okay.
estate is more. You can kind of control it. Where stocks, you're not in control. You're in the mercy of news and CEOs and all that stuff. So you're, but with real estate, you can control that, and so that's nice. I would rather go that route than
educated decisions, educated guesses, right?
Yes.
You know what I mean? We don't know. We don't control any of it, but we, based on historic numbers.
Yeah.
You know what I mean? We can kind of guesstimate what's going on.
Okay.
Have you loaned to family members?
I have.
Okay.
I have. So when I started out lending, I started lending to businesses, and so I got. So as we're doing that, I was like, okay, and then, 2008 came and a few businesses shut. I'm like, oh, how do I get my money here now? And they closed down. So, you go after their assets, whatever. But then we switched to, real estate. It's more secure, more safer. But I've lent to families on business. I always say, listen, I'll lend it to you, but that's my business. This is what I do for a living, so I got to get something back. So I give them a family deal, but I've lent to them. I try not to, because end of the day, you want to keep that relationship, and that's more important to me than doing the money deal. So I always say to them, listen, can you get it somewhere else? Can you try to do something else? One time, I had a family member that wanted to get a car. They want to get an Escalade.
Oh, boy.
You know who you are.
Right.
You know who you are. And I said, I don't support that.
Right.
And I said, if you can't afford it, don't buy it. I'm not going to give it to you. And then they got mad. And
how do you get your money back from a car? It's the most depreciating item that you could possibly purchase.
Yes.
Right.
Yeah. But, at the end of the day, you got to feel good about it. And my nieces and nephews are important to me. I love that relationship with them, and I don't want to hurt it by offending, my brother or sisters or. So I try to keep it, fair. But if they need it, it's there. They know they can rely on me. But I try.
Oh, so you're like Uncle Kellz.
Yeah, but I ain't paying for the Escalade.
Do you have any fears coming into the new year, 2022, or are you just like, you know what, I'm not even worrying about it?
No, I'm not worrying about it. I think it's gonna be all right. I think we're okay. I feel good. Even everybody's talking about another COVID, whatever. I think we're fine.
Go take a look at our first episode. We talked about that.
Yeah.
We talked about why you should not be worried about it.
Yeah.
We so that's one of the things that Kelly and I have personal conversations.
Yes.
And sometimes when we talk, because I am more of an optimist.
Yes.
And I love. He said because we had this optimist pessimist realist conversation, which is Shaka's brain. But anyways, I love talking to you because you have that optimistic side. You believe in God.
Yeah.
You have like great things about yourself that's more than, like you said, it's more than just the money. I know I started off like Jerry Maguire, but
more than the money. Yes,
but I think all in all, you're a great person, and I appreciate you being here.
Thank you so much.
Kellz is more definitely. I'm sorry.
Means a lot to me. Thank you.
You're welcome.
He's definitely more of a realist than an optimist.
Yeah.
Jonnita.
He's not. Kelly, tell him he's not part of.
He's not optimism.
He's not part of our conversation.
But I am.
We have some good deep conversations.
So
me and I, we having some good ones. Yes.
Yeah. Let me ask you this too. So
yeah,
someone that has maybe like their own cash, would there be any benefit to them still doing a private money loan versus tying all of their money up into property?
Good question, Reggie. So some people believe, hey, I don't want to put myself at risk,
Right.
And I want to keep my nest egg. I want to keep my money, and I want to make sure if the world changes, whatever happens, I know I can depend on that money. Some people are like that, and that's okay. They can use us, But I always recommend, use your own money, But some people want that comfort,
Right.
and I don't blame them. We all want. And I'll make sure we're okay. And it's okay if you can use other people's money, and there's enough for everybody. Go ahead if that makes you feel good.
Right.
So
Yeah.
I want to answer that from the investor standpoint.
Yeah.
Right. That's
I
what
have my own money, right?
Yes.
Right.
But I always use somebody else's money. I never want to use my own money.
Yeah.
Not that I'm going to run off on his money.
Yeah.
It's just that I can maneuver. I can't control. He controls his money and
Right.
how it's spent, right?
Right.
I can control my money and how it's spent. So if the market turns and I need to pivot some way, I can still go make the money I need to make to be able to pay him.
Right.
You get what I mean?
Right.
If all my money is tied up in these flips, you
Right.
know what I mean, then I could, you can, what they say, house rich, cash poor.
Cash poor,
you
yeah.
know what I mean?
Right.
I always want to be, I want to keep my cash.
Yes.
You're in a different business though. He's in the business to invest his money, and he kind of understands that you're in a different investment. I mean, we do the fix and flips, but as far as your actual dollar is concerned, you invest that you're in a different business.
But he was asking for the investor.
Asking the
Yeah.
investor side.
From the investor standpoint, was it better for somebody to spend Kellz money as opposed to spending my money?
Yeah.
It costs to spend Kellz money, but it offers that security. You know what I mean?
Security,
yeah. Right.
My worst case scenario, I won't make money on that flip, but I'll pay him back. I'll break even. I wasted
Right.
some
Yeah.
time, but I didn't lose any money.
That's
You
right.
know, and I have he's really good at because I'm not the 3 to 4 month guy.
No.
You know what I
Right.
mean? Flipping is not my it's not my business. You know what I mean? It's something that I do.
Yeah.
But so he gives me that, he affords me that opportunity to have that money invested, short money.
Yeah,
We
it's
still
still
spending
short,
money.
yeah.
Term,
Yeah.
right.
You know what I mean?
But we just slow and steady with it.
So you're
Yes.
looking at it cash on cash return. So
Correct.
150,000 all in of your own money, you got 150 sitting out there for months
Mhm.
versus maybe 20,000 and 130 of Kellz money
For sure.
sitting for months.
100%.
Yeah.
Right.
So
and you're
now I
still
can
making
do
the same profit
hundred-
regardless if you
more.
spent 20 or
more.
150.
You
Right.
get what I'm saying? Making more
Right.
money because I'm taking my 130 and bringing a higher return on
Right.
investment with that 130. Like Jonnita said, in my business or whatever it is I'm spending that money
Right.
on.
Or
I
you
wanna
can
get a
have
higher
multiple,
return.
spread that 150 out over
There it
several
is.
projects.
That's
Yes.
me.
Yeah.
So I'm big on diversifying.
right.
You know what I mean? If I got 150,000, I'm definitely gonna spend some Kellz, and we're gonna go get 7 houses with my 150.
Right.
Right, as opposed to buying one with
That's
that
right.
150, and
Yep.
then out of that 7, if 5 of them hit, then I'm good. You know what I mean?
Yeah, I mean, and I think that's what makes a team good. We are, so I've constructed this, so I'm gonna give myself a pat on the back on this screen here. But, you have to look. So when Mr. Fix-It was on air talking,
Right.
I was the person kind of that, he was saying like you have to pay attention to who your construction person is.
Right.
We didn't talk about money on that particular episode, but
Right.
when you are not new to it and you understand like how everything works, you understand that you have to have a very specific team in place in order to be successful.
Right.
And I think that we have that here. Even with you, we haven't necessarily done as much as we're going to do as a whole, but we have a very solid team as far as how we spend our money, what we, contributed to, and the construction team being, where it needs to be, and then the minds also being present to make it successful.
Absolutely.
Yeah.
What a blessing it is to be able to do things with people you love that you want to be around.
Right.
What a blessing that is,
Oh, yeah.
and I get to do that.
Right.
And I do it with Jonnita, with Shaka, with plenty of people. And, if I don't want to do the deal, I don't do it. I don't, if we're not getting along, it's okay. God bless you. Someone else will get along with you. But it's good to be able to work with people that make it fun and enjoyable and the journey,
Right.
it's great. And, we're talking about money as well. I believe you should always have a nest egg,
Right.
if you have money, and you talked about, let's go back for a minute to, if I have money, do I
Right.
use your money? Yes, because you want to
Right.
keep at least 6 months to a year.
Right.
If God forbid something happens, you can take care of your family, and that's great. So I highly recommend you keep that aside, and then take whatever, and especially I would say go a year, 'cause,
Right.
things take a year until you get back to normal, whatever it is, if anything happens.
Right.
So
So you saying that you're all right with us using you as our
Right.
fail safe? You know what I mean? Like,
so I'm in the same I'm in the same shoes. I
Right.
have 1 year left aside.
right.
So
Okay.
yeah.
That's good to know.
Yeah.
No, you'll never lose.
So you mentioned a couple times that the money is not cheap, right?
Yeah.
And but you're doing mostly like short term financing, right?
Well, I do mostly long term.
Okay. When you
Yeah.
say long term, how long?
So, our loans are about a year and a half, sometimes even 2 years they go.
Okay.
So mostly, I just, on the fix and flip, we just
Right.
started doing that maybe about 2 years ago.
Okay.
Kind of got into it more,
Right.
but most of our loans are bridge loans, where a year, 2 years, 3 years.
Right.
We do commercial as well. So, so those are most of our loans. The fix and flips, I would say about probably 10, maybe 10, 20% max on the
Right.
fix and flip loans.
Right. But if they're acquiring a property, fixing it and flipping it within 6 months, it's really not cheap in the scheme of things when you think about how quick you're paying it back.
For sure.
Right. Versus going 5 years out at that rate probably wouldn't make sense.
Mm-hmm.
Right. So you're doing commercial, multifamily, commercial like retail, or just some of everything in real estate?
Retail, industrial, office. We're in the cannabis industry. We fund, a lot of the guys
That's a
in the
whole
cabinet.
nother show.
Kel,
Oh man.
But hold on. But yeah, because Kel tried to. We definitely gonna have a show.
Yeah.
We got the show. We got
About that, and
Right.
that's all right,
Right.
No, we
So-
still gonna make it happen.
Yeah.
Just gotta do it now.
I could have made some.
Right.
That's another story.
Right. So wherever the money is in real estate, you're parking it there. Sounds
Yeah,
like.
yeah.
Okay.
We just look at security. We just want to be secure.
Right.
That's, just make sure we're able to get our money back and
Right.
bless that person, and he is able to pay us back and make his money, and everybody's happy.
Okay.
So, yeah.
When you do like the buy and hold loans for somebody that wants to acquire properties that they're going to buy and hold, are you looking at their potential to refinance out of that?
Yes. So, so the buy and hold people, normally, whether they're having a hard time with whatever it is, there's so many scenarios. So we lend them the money. I mean, I just had a lady call me yesterday, and she's been with me for about 4 or 5 years.
Right.
And this was supposed to be a 1-year loan.
Mm.
And she's still with me, and what a wonderful lady. And she called me, and she said, Kelly, I'm ready to pay you off. I'm like, all right, she's getting a mortgage. I says, okay, great,
Right.
and we worked it out, and I sent it off, and she needed a concession. I said, all right, I'll write the concession in there, and
Right.
and I said, whatever it needs to make it happen so you can get your mortgage.
Right.
And we're going through the process, and some people look at us as just the lenders. No, I want to make it successful for you. I don't
Right.
think everybody's going to work with you the way I work with everybody,
Mhm.
and I, for me, it's important that, you get your money in her situation. I want her to mortgage, get a bank loan, which is great. She's at 3%. I'm like, wow, all right, good job. Can they give you more?
Right.
And she's financing out, and she needed the money to close for her concessions, and I
Right.
said, no problem, and so, yeah, the point is to get them financed out eventually. If they
Right.
don't, that's okay. We work it out, and we keep it going. Especially, if they're, they're trying, and they're
Right.
being good with me, I'm good back, So
Right.
we always make it happen.
So that's another point. So with a private money lender, there's a little bit of flexibility after that term is up versus like a bank.
Mm.
You're probably not going to get that extension. That
Yep.
balloon payment is probably going to be due.
Yes.
But you guys will work with the person case by case.
Yes,
Yeah,
case
okay.
by case,
Right.
Yep.
Cool.
But most people, it's been good,
Right. All right.
Yeah, Kel brought up something. He said it's like he liked to deal with like family and whatever, and we bumped heads a lot, right? We did, right?
Right.
Yeah, we did.
But it was and never, we can agree to disagree.
Right.
You know what I
Yes.
mean?
Right.
And
Yep.
we always made sure that that nobody felt like they lost in the situation.
Right.
Yeah.
That's what the bank doesn't do. You know what I'm
Right.
saying? The bank don't care. They are only about their money.
Right.
When me and Carol didn't agree on something, we talked it out and
Yep.
we negotiated
Yep.
deal that was
Exit
we feel
clause.
in the best interest of both of us,
That's
right?
right.
You know,
Yes.
you know.
We worked it out. It was great.
Yeah.
And
Just
here
like
we are
like
sitting
a-
and still talking, still hanging out, and
Still lending.
Right.
He
Still
still
lending.
lends, you know what I mean? Like,
Yeah.
he didn't say like I'm not lending him no more. You know what I mean? He still lends.
Yeah.
Still pick up my phone calls.
Heck yeah.
Still calls for his favors.
Right.
I don't get them, but I call.
Right.
I be trying. Even here in Detroit, I keep telling him I'm not. So it's the other thing though. Kellz is so he's Jonnita did the same thing to Kelly, right? Or kinda, because you're not big on the city of Detroit.
No, I'm
Wow.
not.
But
Jonnita pushed me.
Yes.
Yeah. It's money in Detroit.
It is.
Yeah.
It is. There's no getting around
Detroit
that, right?
is really good.
It's
Right.
not. We talked about that, right? We
Yes.
was like, man, this is not something I would normally do, but man, the return here seems so large.
Yeah.
Right? So we got to take that gamble.
Because you have to make it make sense. I'm from Detroit. Everybody pegs me as like super emotional because of Detroit, and I am. I don't deny it. However, I'm very smart, and I'm not going to watch people from the West Coast, people from the East Coast, and all these people come into the city and they're looking at it. It's like, oh, this is prime real estate. The real estate is 1,500 to 1,800 plus square footage, bedrooms, garages, waterfront. And we're not going to make money off of it. It just makes no sense.
Right.
Yep.
Right.
So, yeah, I'm going to speak to as many people that will listen about it. And I'm sure there are other cities that are just like it. You know, Detroit is a big city. It has a high, everything rate.
Right.
But there's money to be made here. And why would we walk away from it is always my question. Why are we walking away from this?
That's
That's right.
So let me ask you this. So, like, you're a licensed contractor. What about the investor that wants to do the work themselves? How does that work if it's maybe a $60,000 renovation? Do you try to qualify them and see if they're capable of doing the work, or how do you get involved with that?
Good question. Yeah. So, they're not going to be able to do all the work themselves, especially if it needs HVAC or
Right.
electrical, or, he may be able to put up the drywall and paint and,
Right.
but if he could do that, good for him, more money for him.
Right.
And I encourage that, if you
Right.
could pick up the hammer and go do the demo or whatever it is, that's money you don't have to spend if you have the time,
Right.
and it's a learning experience, so I highly recommend they learn it, because, once you know it, then you can see how much time it would cost, how much time a person that's going to demo, how much time they need, how much the, dump truck is going to cost, et cetera, et cetera.
Right.
So going through it is ideal for a new guy, or even if you're in it, go through it and
Right.
learn. I recommend that.
Right.
You should be hands-on.
So Kellz he's being modest, right? So he has
That's why I
yeah.
asked.
He's being real modest. So
Right.
he has a whole lot of relationships. He's
Right.
a lender, right?
Right.
So
Yes.
everybody owes him a favor,
Right.
right?
Oh, okay.
So I remember. So I'm one of those contractors that I do all my stuff
Right.
in house, right?
Right.
Kel come over here. He sent I still got it in the text. He sends me like 3 of every 3 plumbers, 3 HVAC, 3 electrical. Oh yeah, this guy does demos. This guy
Right.
does your yard. These
Yeah.
guys are really good at painting.
Right.
You know what I mean? So yeah, he's definitely really involved,
Right.
and he's actually helping to negotiate pricing, kinda, right?
Yes,
Yeah,
yeah,
you know what I mean?
Yeah.
Because there's a lot of times I'm like, Kel, this gonna cost this much. He's like, what?
Right.
No way. I'm use this person. He's gonna do it for this dollar amount.
Right.
You know what I mean?
Yeah.
So what
Yeah.
I'm hearing too is like, so I deal with a hard money lender, and they're just like, you're on your own. The numbers work for us. The numbers work for you. We don't care if you
Figure it out.
profit $5,000,
Mhm.
right, for your 6 months of work. But it sounds like, in a sense, you're somewhat like a mentor in a way, because like a new investor would come to you, you're probably not going to leave them out to dry. Okay. So you're gonna give them resources and things
Oh,
that
yeah.
they may
Oh,
be
yeah.
lacking. You
Oh,
want to
yeah.
protect your investment.
100%.
Yeah.
You know, I had one of she's an agent and
Right.
really and she moved out of state and she still flips in Michigan.
Okay.
And you know, she her HVAC, her furnace went bad. She wasn't gonna replace it. She got quoted $7,500 to get the HVAC and AC replaced. And she says, hey, you know, Kellz, man, I'm gonna need some more money. I got to do the HVAC. I said, how much he quotes you? You know, she
Right.
said 7,500. And then she had another company that was gonna do terms for 9,500
Oh,
until
wow.
she sells it. Yeah. And I said, okay. And so I called my man,
Mhm.
and he went and $3,500. I
Right.
said, I'll pay him, you know, just at closing, just reimburse me.
Wow.
And I was able to help her cut her AC, furnace and AC in half.
Right.
He said his
3,500.
man. He not talking about me, y'all. 'Cause I don't,
No,
I don't
no,
know
no,
what
but he
furnace
knows
for
who he is.
$3,500.
Right.
Right.
Okay.
But you know, they're she's my people, you know. So
Right.
I take care of her, make sure she's good, and she was happy, and we made it work, kept it moving.
Cool.
So yeah, I always tell them if you need something, just call me. You know, if you need an opinion, if you need question something, if you need a contractor, call me. You know,
Right.
I'll send them your way, and you guys work it out. And if you need my opinion on pricing, let me know.
Right.
Yep.
So
I guess what he
that's
said-
the biggest difference. So
That's it.
to me, you answered the difference between private money and
Yeah.
hard
Yes.
money. Because
Yes.
hard money is like, here you go,
Yeah.
we
About
want
that.
it back with this, and you're more, a little bit more hands on.
A lot more.
Be.
A lot
Right.
more. A lot more hands on, definitely. And it does work for people that are novices.
Right.
People that are more experienced
I'll
may
be
not
like,
want
no.
kill
Kelly.
nothing.
Yeah.
That's when Kelly and I do. I'd be like, Kelly, are you serious?
Come
Come on, bro. You gonna run numbers better than me?
right.
They said, let's put it to the test. Come on.
Yeah.
And I'm not gonna put you on complete blast, but I know that you just moved down to the price that I suggested 6 months ago. I'm just saying.
Different. It's different.
Nope.
No.
Moved down to a price that I suggested 6 months ago. That had he listed at that price, he probably would have gotten
More.
15 to 20.
I
more.
don't agree with that though.
He
I
don't
think-
have to.
So if he would have listened to my advice no, I'm just joking. Because that was we talked about it. You know, it's crazy. So just in case you see the episode, we had a conversation. We didn't go into detail about
Okay,
it,
cool.
but we talked about that
He
project.
Oh, yeah.
Boston. He's
Yeah.
Boston. Right?
Okay.
Oh,
yeah.
Yeah.
So if he listened to me, he would have got the number that he went at, and immediately.
What number was that?
450.
Well, we just told 450.
I know, but we didn't do what I said to do.
Oh, the work.
You know what I mean? Yeah.
We
He
had
didn't
a
listen to
house.
you.
I had to lend money on the house. The guy passed away.
Wow.
Yeah, he had a stroke and he passed away. So I took it over and finished the work. And
Right.
Shaka helped me out, and he was actually in charge of it. And then so we just finally got under contract.
Okay.
So
Congratulations.
yeah, thank you. Tomorrow we have the inspection, so
It's
we'll
gonna
see how
pass.
that goes.
It's gonna pass.
It's gonna pass.
Right.
It will. Yeah. So it's good.
Right.
It's a nice house, beautiful home.
Okay.
Yeah.
So you have some properties that you may have to take back. What do you do with those properties? Do you finish them yourself, or do you go to another investor and say, "Can you take over these terms?"
So most of the time, I try to just get them off. You know,
Okay.
I just don't want to deal with them.
Right.
But if we really can, and I feel like, okay, doesn't need much work in this situation,
Right.
needed a lot of work, this house.
Right.
So Shaka came on board and we did it. And but most of the time, we just want to get rid of them. Yeah.
Okay.
We just liquidate.
All right. And so liquidate them in their as-is condition, pretty
Yes.
much like
Yep.
the banks do.
Don't lose.
Right.
Just don't lose money.
Just don't
right?
Just
lose
don't
money,
lose
yeah.
money. Right. Is there ever a time where you would call one of your experienced investors and say, "We already got the money allocated for this," and they just take it over completely and they pay you
Yes.
monthly payments?
Yep.
Okay.
Yep.
All
They
the
do
time.
that all the
Right.
time. Jonnita had one deal recently. We
Right.
almost sold.
Yeah.
Yep. So yeah.
Right.
Okay.
Kellz, I
All right.
appreciate you getting on here. We're gonna bring you back, definitely.
Yeah,
Come back
right.
again. It wasn't as
I
bad
was
as you
nervous.
thought, right?
I was nervous in the beginning. I got warmed up a little bit. This
Right.
is kind of out of my comfort zone. So, but it's good. I'm glad
Yeah.
we did this. I wanted
Do it some more.
to learn.
Absolutely.
I really appreciate you. I've never seen Kel out and down here because you live further north.
Yeah.
Right.
He's normally leaving at 5. If you don't get him by like 5, 6,
Right.
Supermax,
Yeah.
it's over.
Unless it's urgent, yeah.
Yeah.
You can wait till the next day.
So I appreciate you
That's
coming.
good.
If you
absolutely.
got called, he wouldn't have came.
Huh?
Lies.
That-
Actually, you gotta tell her
I
about
plead the fifth.
No. Well, you gotta tell her about the conversation that got him here.
Oh, okay.
No.
We'll talk about it later. Great guys, everybody. This is There's Something About Real Estate podcast, the conversation about all things real estate. You're gonna start calling us TSARE.
Right.
Jonnita Stanton. Reach me at Jonnita Stanton on Facebook and on Instagram.
Reginald Perryman. Reggie is real estate. Just Google me.
ShakaSales.com, MasariContractors.com.
Kelly Shamoon, Premium Homes Realty. Talk to Shaka or Jonnita.
Please.
All right. All right.
All right,
Thanks
it's
so
a
much,
wrap.
sir.
Thank you.